Hello and good evening, everyone. It's Matthew McCora with our event today. We're going to be discussing how to take full advantage of different various strategies of profiting on stock trades, leveraging time, also looking at different ways to also add on options trading on top of identifying high profitable trades out there. So excited to be here with you. I've been speaking with this group for quite some time. It's got to be well over 20 different events throughout the last several years. I always have a pleasure working with this group at Investorexpo. So looking forward to it. If I've met you before, it's glad to have you back. And if it's the first time we're meeting, I'll give you a little bit more information on myself in just a few minutes. I want to make sure that we first just go through some housekeeping items. So if you've seen my event before, then you know that I like to operate the event more as a workshop. So I like to teach. I like to be on the charts more than on a PowerPoint slide. So we'll definitely be there, I promise you that. So if you've once again seen me before, then just bear with me for the first few minutes. Let me catch everyone else up to speed, and then we'll be able to jump into the fun stuff, which is analyzing the markets. So at this point, let's just do a simple audio and video check. We're going to be leveraging the built-in question section with GoToWebinar. It is on the bottom of your control panel. If it's minimized, then you just want to find this little rectangle with the orange arrow on it. Click that orange arrow, then the panel will open up. It just hides itself if you're not using it. So if you can, in fact, see the slide that says sound check, if you can hear me, and then if you can see my webcam, go ahead and let me know in that chat box or question box. I'd appreciate it. Hi, Ralph, good to see you in there. JR says he's good. We got a 4x4. Let's see, we've got Alan. Thanks, Alan, one of my support here today. He's going to be helping facilitate the event. So if you see him communicate with you individually via the question section, no, it is us. It is not some random stranger. We have several team members here to help answer questions and to facilitate the best event that we can put together for you. Clevenger, I see you there too. Thank you. Appreciate the feedback. Okay, good. So based on the comments, looks like we're good to go. You know, I won't go through everyone's name just to keep things on track, but I do appreciate all of the early interaction. I love questions, any type of feedback that you come up with. It could be a basic question in your mind, maybe you think it's complex, and at the end of the day, I'm going to try my best to answer those questions. I don't know everything, but I sure do know a lot. Okay, so ultimately, today's theme, and really the theme of all of my trading, is based around momentum and trend patterns. As simple as can be. I'll give you a little bit more about my background in the financial markets in just a few minutes, but what I want you to wrap your head around is we're going to talk about some of the core components of what makes the financial market what it is. It is a supply and demand driven market. It is a transaction based market. So when there's buyers more than sellers, price goes up. When there's more sellers than buyers, price goes down. So what we're going to talk about today is how to recognize a pivotal point on a chart on any particular symbol where there is a high propensity to break out and move. Okay, so that's how we're going to combine momentum and trend patterns. So we're going to be leveraging several indicators on charts. I'm going to share all of them with you, so you don't have to worry about anything kept hidden from you. I have full transparency on all of my chart layouts, all of my templates, so that way you can actually follow along in today's event. Right? You don't have to buy something and then you get to be disclosed what's all the bells and whistles. I'm going to share it all with you today. Now, red days, green days, it's all about momentum and trend patterns. If we can answer those two questions consistently, then you're going to find yourself in opportunities that move, right? When you buy something or sell something, it moves, right? And that's what ultimately the end goal is. So what's interesting about the process that I'm going to share with you all is that we always start, no matter if you're going to trade an option or not, we always start at the underlying stock level. Options are a derivative of the underlying stock. So simply put, as the stock price goes up or down, the options premiums go up or down accordingly. Now, of course, there's different variables like expiration month, delta, vega, gamma, theta, right? There's a whole bunch of variables that impact the actual premium price itself, but it's attached directly to the underlying stock ultimately. Okay, so The beauty of this is that we start at the top level, and then if we want to decide, or if you're interested in trading the option to take advantage of margin and leverage, we've already done the homework, right? We found a stock that's poised to break out. Like this chart here was a trade that we identified, this was a few months ago, where we had a particular pattern set up, and actually the system, the tools that we use brought it up into a list. So we looked at the list, found Garand Corporation, which is in front of you. We had an opportunity to trade the stock, or we traded the option. So we went with the option and made about 120% in just around 30 days. It's also bearish moves. Okay, so I'm going to help you identify, once again, a specific momentum and trend pattern alignment that breaks out either way. So red days, green days, extensions, retracements, could be consolidation. You know, there's a telltale sign of when something's about to go, and I'm going to share that with you today. But once again, this is instead of shorting, okay, we just bought a long put, and ultimately it's been time tested. It's been in, you know, I've been actively delivering trading signals around this strategy I'm going to share with you, and these are some of my cherry picks that I send out on a weekly basis. And since, you know, August 2020, we've captured about 3,500 net percentage profits. So that's with winners and losers. I'll explain more how that number, you know, relates to you. But in my opinion, this is the number that's more relevant to everyone. A lot of other groups like myself, they'll show you, you know, a percentage, and they'll include your investment. So if you put $1,000 into a trade, you made $1,500, they'll say you made $2,500 in the trade. Well, to me, that's not really the pure definition of what a profit is. Okay, so this is a net percent profit. Okay, so that means you take all the winners, all the losers, add them up, and this is the performance that we've captured. That's about 380 or 390 trades over that time period. But we'll show you more results in a second. Because we're talking about results, because we're talking about past performance in the markets, you know, one thing about trading, especially in almost any piece of the investment puzzle, is we're looking at previous data. If I'm looking at an earnings report, let's say it's GE, General Electric, has, you know, earnings coming up. Well, there was earnings come up, but they were the previous quarter, right? I'm looking at previous data, right? Past performance of a company, and trying to make a research-based decision if it's time to invest or not, right? Well, same thing, you know, for us as retail traders. If we're looking at a chart, if we're talking about previous trades, it's always past performance. When we analyze and look for opportunities to trade, we normally use trend lines, right? Trend lines is a collection of using previous highs and lows and getting a direction of a move, right? That's purely looking at past performance, and we're trying to use what's happened to gauge what's going to happen next. So it's my responsibility. Many of you have seen a disclaimer like this. It's pretty commonplace, and this must be disclosed in an online event like this. But ultimately, trading in the financial markets carries risk. You can lose, you can make money, you can lose all of your account, you can lose a trade. Ultimately, the way I like to think about this is, if you're going to invest in the financial markets, only use risk capital. Risk capital means if you lose it, you can still put the same amount of food on the table. You can keep the same roof over your head. Okay, so if we can protect ourselves, always have equity management in mind, I think we can weather the storm effectively, any storms that come up. Okay, but you know, I do have to disclose that there is risk in the financial markets. So what you're going to see me talk a lot about today is, you're going to hear me use the word simple. You're going to hear me use the words repeatable. To me, that's a system, a clearly delineated step-by-step process that is simple to understand, simple to implement, and then of course repeat that process. What you're going to see today, many of you who have been in the financial markets may look at this and go, man, it's too simple. Well, I challenge you to try to take a step back and evaluate, is simple better or not, right? Complex. The one thing about complex is that it takes months and months and months to figure out most times, right? And so ultimately, I believe in simple, repeatable things that can logically make sense to us, and that's what I'm going to be sharing with you. I like to teach. You know, you're going to hear me talk a lot about the ins and outs of the strategy today. Nothing's going to be hidden, full transparency. I'm going to give you the exact template that I use over and over and over again. I'm going to actually share my checklist with you. So nothing's going to be left to guess. And if there is something that you're not quite sure about, a process, or maybe you're not quite sure where that breakout is, let me know. All right, my goal is to teach. So that's why I consider this event as more of a workshop than just a demonstration, which is another fancy way marketing companies like to describe an event like this. Ultimately, what many of these events are for is they're for sales, right? Creating revenue. Now, I do offer a signal service program where I identify, I handpick trades daily, weekly basis, and then I do deliver them to my traders. But to me, I use that as almost a bonus. What I like to do is to teach and to coach and to pass on this strategy to you. And if you like it, you want to learn more, you want to be a part of my team, part of my club, then that's fine. Then we'll talk about that towards the end of the event today. But I'm going to focus first on teaching. I believe that even if you come in here today, you spend an hour, hour and a half with me, you should be able to walk away with at least 2 to 3 new techniques that you can use right away in the market. That's how in-depth I'm going to be with you. So we're talking about making money, right? Return on investment. So of course, we're discussing money. Now, before we jump into the charts, and we're going to be there in just a few seconds, for those that haven't met me yet, my name is Matthew McCoro. I've been in the financial education and trading technology space since 2007. Actually started in December 2007, which for those was the start of the last great recession. So I earned my chops in technical analysis in the last great recession that we had. So almost full circle. It's not quite as deep of a recession as we saw back in 07, 08, 09. But that's when I learned my chops, or earned my chops in technical analysis. So interesting enough, I worked at the time, one of the largest financial education and trading technology companies. So I was actually paid to learn how to trade. Whereas many of you probably did one of two things. You either read a book, watched some videos on YouTube, or you decided to buy a $1,000, $2,000, $3,000, $4,000, $5,000, maybe a $10,000 educational program to teach you how to trade. Okay, so mine was inverted from that. So I actually started doing exactly what I'm doing here today with you, which is to coach and teach and mentor. But over my experience, I also sold. I was also in marketing. I actually moved up to become the chief revenue officer. Now, the relevancy of that is the intel, the behind the scenes access that I had in that role. So not only was sales and marketing under my purview, but it was also customer service, product development, AKA trading education courses, systems, indicators, auto traders, anything under the sun that you can monetize in the space. I was overseeing the creation of that, because ultimately it always led down to the sale. So after about 10 years, I decided at that point I had enough. It was a good time because my kids were small. They were 3 and 4 at the time, and I was classic corporate work schedule. So 12 hours if you include the commutes. I would get home, kids are in bed, I would leave, they're just waking up. And so I decided, look, I've been doing this long enough. I'm also, sick and tired of the grind of creating revenue. If you think about it, how do you create revenue? Well, you have to create product. Well, if you buy one thing and it solves your problem, there's no revenue from that. So our goal and our job was to come up with new fancy ways to create something and to create revenue. Well, there's only so many ways you can skin a cat. So ultimately, that was also a bear on my, I guess, conscious over time. So, decided to take a 6-month break. This is back in 2018, about 6 months, and I had the itch. So I said, look, if I'm going to get back into the financial education market, I'm going to do it a different way. So I went out and found some fantastic partners, people that I built relationships with, and we decided to do things differently. So what you're going to see today is a pure focus on education. I only have a handful of programs. It's like 2 or 3, and they're just very specific types of trading. And my goal is to coach and mentor through my live trading sessions that I have every single week. So for me, it's less stress, it's a lot more enjoyable, and we focus on one process and we just hammer it over and over and over again. So ultimately, I know a lot of the tricks of the trade. I've developed a lot of them in my chief revenue officer experience, so I can definitely help steer my clients, and I do, help them find some great resources without these, large costs. But that's a little bit about my background. I believe in momentum. I believe in simple and repeatable, of course. And at this point, enough about me. I just wanted to share a little bit about me if you haven't met me before. But at this point, it's appropriate. Let's go have some fun, and we're going to jump to the charts. So I'm going to go to the charts, and I'm going to cut my camera off so we have a little bit more real estate. Okay, but promise you, it's still me. This is not pre-recorded. I'm live with you. So what I want to do is, while I get the charts up here, I want everyone to type into the question section. I'm gonna create a custom watch list, okay, for all of you. So that way I'm gonna be teaching to your interest and not just a canned, list of stocks that I've already gone through and I guess cherry picked. So at this point, go ahead and go to the question section and just give me your top stocks that you're looking at. Give me 2, give me 3, whatever pops to mind. It'd be easy if you include just the stock symbol alone, but I want to make this as interactive and as personable and precise to your interest. So go ahead and jump in, and I'm going to create a watch list just for us today. And then we'll use this as our basis to break down the strategy today. All right, so let's do, I love it. Hey, Rocky. Yeah, we got some new clients in the room too. Oops. All right, so today is, Lord, Pearl Harbor, i.e., let's do the date, 12/07. I always like to save these so we can always go back in time and look at them. All right, so we've got our list going on. Tesla. Everyone always says Tesla. Oh, we got a direction small cap bear 3x share. Look at that. Got Rocky with us, Kroger, AAL, Tiger, NNDM. What is that? Nano Dimension. All right, we got a lot coming in. Let's see what else we got. Let's go NLY. I haven't seen any duplicates yet. Yeah, MAP. It's pretty good. That's a well-rounded group we have. Okay, now if you are still typing or still thinking, you can always dump it in. I'll add it in later. Not a big deal. All right, so this software here in front of us, this is a trading view. Now, I am an affiliate. I've been using them long enough and decided a few months ago to say, look, hey, I use it all the time. And hundreds of traders have said, okay, I want to follow precisely with you. So, makes it easy to follow along. But ultimately, you don't need to have a paid version of this software. Okay, so if you haven't seen TradingView or used it before, the exact setup that I use, the template, can be used, and I used it for a very long time on the free version. Okay, so there's like a free account that's basically they consider a registered account, but you can have 4 indicators, you have all the live pricing, and it's free. Okay, now you will get advertisements, which is kind of a buzzkill, but ultimately, if you want to upgrade, I just use the smallest paid account, which is $14.95. Okay, but as I stated earlier, I've been in this industry so long, and I've sold over $150 million worth of educational products, technology, signals, anything under the sun around trading. And there's a lot of software out there. Some of it's super inexpensive. I would consider TradingView super inexpensive, and then some are very expensive. And I am anti-expensive software. Anything I can do or anything I can provide to lower the overall operating cost, of this business of trading, to me, it's important. It's one way to gain more profit is to lower your overhead. Okay, so, but it's up to you. You can use this on any software. The indicators that I'm going to walk you through are public domain. There's nothing proprietary about them individually. So there's no worry there. You can use this on your stock charts, your broker charts. I haven't come across a software that does not have these indicators. Okay, some of the most often used indicator setups. Okay, so just wanted to put that out there. So what we're going to do is we're going to start with Tesla. Okay, now remember what we're the main course on the menu today is identifying momentum. Now I've got clients in the room. Okay, so clients to me is defined as you're in one of my trading signal programs. You're also in my weekly live trading session. So some of you I appreciate are going to have a little bit more advanced questions, and there's nothing wrong with that. So just give me some patience. I've got to walk the majority of the room through this, and then I'll go back in with more detail. Okay, because I can recognize a lot of names here, which is fine. I know I love having you with us, but of course, I want to at least give the new viewers a chance to wrap their head around it, and then from there we'll go deeper. As you know, in classes, right, we go a little deep. Okay, so the first thing I want to do is we're going to talk about identifying, to me, when we have, when I was the chief revenue officer, we had about 5,000 up to 6,000 active clients. Okay, meaning they had at least purchased one of our flagship products, which was $5,000 to $7,000. And so with that many clients, they had, just like anybody when they first start trading or you're learning something new, right? There's a lot of questions, right? Well, over time, what I found in digging into the data is some of the most common obstacles traders face, is number one, and I think the most important is trend direction. Okay, where is the probability of the direction? Is it going to be moving up? Is it going to be moving down? Sounds simple, but yet that becomes and has become, and still in my opinion is, the most difficult aspect for all traders. I mean, this is not just retail traders. We're talking about institutional money and all that good stuff. So for me, one of the classic ways to technically trade or to identify trend is using trend lines. Well, using trend lines, aka drawing trend lines, a key distinction is the act of drawing is art. Art equals subjective. I prefer to be on the objective side, the math-based side. So to help overcome the difficulty in learning how to manually trend or manually chart a stock chart, an ETF chart, it doesn't matter what chart it is, right? To actually technically and properly draw trend lines takes a lot of time, right? Because there's some nuances, there's some rules to understand. And to me, it also takes a lot of time. So what you're seeing on the chart here is a classic combination of trend analysis, trend lines in a 3-stack setup. Okay, so in the top left, you can see the trend lines are moving averages. These are simple moving averages. These are not exponential, they're not weighted, they're not exponential. These are simple moving averages. Now you can, and I have traders that use the exponential, they use the weighted. But for me, I like to keep it once again simple. So the numbers in the middle here, right? It says moving average, MA, as 1 day. Okay, so I do 90% of my trading on a daily chart. I'm a swing trader. So my definition of a swing trader is I'm in a position for days and weeks. A scalper for me is minutes and hours. A position trader or long-term trader is weeks and months. So this specific combination here, and the combination is a 10-day moving average, a 20-day moving average, plus a 50-day moving average. So this combination, for me, gets me an average trade time, meaning I get in, I get out. Over time, my average is about 3 weeks, okay? Now, if I'm a position trader, I've got a different setup. So if I'm looking long-term, okay, if I'm gonna be in a position trying to catch a big low, maybe I'm gonna buy some Apple because Apple's, really low, right? Okay, well, I'm gonna do analysis on a longer picture, okay? So I would use a different combination. But this combination is where we're gonna start today, okay? What we are getting with these trend lines is we're getting an inner trend line, a short-term trend line, and a long-term trend line all at one time. So the simple way I'm going to do this is I'm going to start by hiding the short term. Now there is a fourth indicator, it's volume. That's our momentum. That's going to be our momentum indicator. So I'm going to walk us through that in a moment. Let's get the trend down first. So I hid the 10-day, hid the 20, and we're on the long-term trend now. And that's what this red line is. Okay, that's a 50-day moving average. So basically what's happening is it's a rolling, trailing 50 days. So every day that number is added to the front, and then now the 50th number that was there now becomes the 50th number of the new day, okay? Well, ultimately what that is about a 2.5 month trend line, because there's on average 20 trading days in a month. So if I've got 50 days, that's 2.5. So we've got a nice sizable trend to identify the longer term direction. So the simple way we leverage this is where is and where has the candles been, okay? Where has the price been in relationship to the 50-day moving average, the red trend line? So when we're below it, it's a downtrend. When we're above it, it's an uptrend, okay? Below, down, above, up, okay? Same thing back here. This becomes the fulcrum. This is the reversal point. Now I'm going to get into a lot more detail about the reversal point because that's one of the pinnacle areas to catch breakouts, okay, is at a reversal where something's down, it goes up, something's up, it goes down. So that actual moment of time of the cross, okay, so we're crossing up, is extremely powerful to identify. This is the long-term trend. So the beauty of this is that it's objective, okay? It's a formula that is a simple average, it's a simple division, and it's the same formula no matter what chart I'm looking at, no matter what side of the bed I woke up on, no matter if I'm on a winning streak or if I'm on a losing streak, ultimately it's the same formula. Now, the additional beauty of using something like this, an indicator, is that I can also leverage this in a filter, okay? So I can then program a screener to search for specific types of patterns. You see, if I manually drew on trend lines, I couldn't use a screener, right, a filter program to go find me a specific stock at a specific point of time, in time, right? So that's another huge benefit. So the speed of this, as we look through the watch list that we have, did I add MPW? Okay, we got a couple more. Let's see. We got a couple more on the books. Let me throw these in here real fast, and then we're going to go through this fairly quickly. I mean, this is as straightforward as I want it, okay? The whole goal is to simplify this. Now I'm going to get in a lot closer, okay, so to the chart, so really dive in, but the speed of this is where I find a huge benefit, okay? So as we flip, and I just go through these different stock symbols, we're going to be able to quickly realize where are we at. Now, the definition of I told you Rocky was going to come back down, didn't I? I love it. Okay, Rocky's one of our clients, just started with us, I think last week, right? A definition of a uptrend, okay, is making higher highs. Okay, so that's a high. This high is higher than that high. This high is higher than that high. Well, what's the definition of a downtrend? Well, you're making lower lows. So this low is lower than that low. This low is lower than that low. That's a downtrend. Okay, so structurally, where we are in relation to the 50-day is also tracking to the pattern. Okay, so, but this is just a simple way to be able to flash through and quickly identify. Now, when you look to a chart, and we're going to go back to Kroger, maybe we'll find another one here. When discussing these trend lines, let's go to something that's a little larger, a more well-known stock. There's nothing wrong with the stock list that you have. Nothing wrong with it at all. But I want to get something that's a more common, you know, that many of you may recognize to show this process here, okay? Let's go to Tesla again. Let's start at the top. If you could have found Tesla, okay, so if you had an ability on the 23rd of September, Let's go back in time machine, okay? Where at the end of this day, this was a Friday, okay? At the end of the day, Friday, you had a list. And that list had a breakout opportunity for Tesla. Okay, it pulled up, just like there's a list down here. This is a screener. Okay, let's pull it up. There we go. So this is the screener this would show up on. Okay, so this is, I'll get into the details, folks. I'm going to give it to you so you have the actual settings. But see, there's a list of 32 stocks. Okay, this is a strategy. It's called the aggressive bearish breakout strategy. It's one of my 4 main strategies to trade. So what happens is I program the filter to find me very specific patterns, momentum, and liquidity data points that align. They have to all check the box. And then I get a list at the end of the day. And then I go through and look at the list and say, okay, what kind of opportunities, where's the profit, and I go through and I'll pick trades from this list. I don't have to go hunt and peck and go find them on my own. I just basically click a button and I have a list that I go evaluate. So it really helps streamline the process. Now, mind you, there's 7,200 common stocks, over 7,200 common stocks. Now, there's more, OTCs and whatnot, but let's just talk about common stocks, 7,200. Well, I'm just looking at a list of 32. That's a small percentage. Well, that's intentional. See, one of the things that's interesting about the financial markets is many traders tend to overtrade individual stock symbols. So I'll get into that in more detail, but meaning you focus on 10, 12, 13, 14, 15 stocks, and then you trade those over and over again. Well, for me, you're going to see that there's ways to let your money work harder for you by widening that top of the funnel, meaning instead of focusing on such a small list, you're focused on a big list. Okay, so then you were able to catch and trade based on patterns. Even though we're going to find small caps or hires, we have different settings to make sure we're dealing with good companies that are well known, that have strong market caps, strong liquidity. All right, so we go through that process to weed out some of the wacky, stocks that exist. Okay, so, but having a list like that, Tesla would have shown up here. Okay, this would have shown up as a sell or as an opportunity to buy a put. Okay, to trade an option the opposite way. Okay. Now, it's not just the cross. Okay, you see how we were above it and then we're going down. Okay, so we're trending up and then we reverse and go down. Okay, that's a reversal point. That is a point of potential reversal. Now, I'm going to get the 10 and 20 moving average on, but before I get those other moving averages, I want to talk about volume. So the volume is the number of shares traded. It is not, and some people get a little confused on volume. It is not dollars and cents. Okay, it's not how much dollars were traded on Tesla. It is the number of shares traded. Now I've changed this because out of the box, the volume indicator with TradingView is a line chart. Okay, I don't want a line chart. I have a column chart. And then I've turned on a moving average. It's a 20-day moving average. So in the bottom half here of the chart, and I'll zoom in here as close as I can get. See if I can get this out of here. I should be able to. New pane below. Okay. So now I can make this a little bigger. All right, so this is volume. Without this moving average, we don't have anything to compare it to. What I'm looking for is I'm looking for a surge. Okay, there's 2 spectrums to volume. There's high volume, low volume. High volume is a surge above an average. Okay. Then you have low volume, which is obviously less than average. Now I haven't yet to find an instance where I've compared days. So you can go to Yahoo Finance. There's so many resources. You can go to Thinkorswim and actually pull a 12-month daily performance of a stock, right? So like Apple, for example, you can go pull Apple, download it to an Excel, and then you'll see the open, high, low, and close, and the volume. So I've done this so many times where I'll literally take all of the days and I'll find what the average volume is. And then I'll take the days that are above volume and then I'll get the average price move, okay, the high-low swing, and then I'll do the same thing for the low volume. And 95% of the time I've done that with any stock that I've done it with, it's over double, it's over 2 times greater stock price movement when there's high volume. And to me, I really haven't found an argument to dissuade me from the data that shows high volume moves the market at a faster rate. Okay, price moves faster with high volume. So ultimately, if we can find and attach vertically, right? I mean, recognize a shift in activity. So activity is low and then activity spikes. I'm talking about trading activity. What you're going to find is that when it's also at a point of reversal, okay? So that moment where we first break a trend line. So I'm going to get this back into a normal place so we can have more real estate here with the volume. This is a close, okay? So I know there's lows here, okay? So these are lows, but the close price is most important. So this day, the 23rd, was the first close below the 50-day moving average since for Tesla back here in July. Okay, so we're talking about 2 months, right? That is a potential reversal. Well, then we look down below and we see a surge. We see above average trading activity. So when we cross from an uptrend and we reverse down, okay, that means we're going to be looking for a down move, a bear trend to follow, okay? The volume is what we want to create the momentum, create the push. This is the aggressive bearish breakout. So when you see this surge and this extension happen, it didn't start here, okay? It was started and identified. Look at these new little widgets I got. What is that? Okay, I got some emojis now. Little overkill. All right, now they got some real cute icons, right? This is what started this move. Now there's other movements that happen, okay? There's continuations of this that occur, okay? Extensions, retracements, extensions, retracements. Many of you have heard that before. This is the point of reversal here. Look vertically. I want you to change your eyes to vertical. This huge spike of activity. Now the data's up here, okay? So in this top left box, when I get to the day, you see the big column below my cursor, there's 142 million shares traded for Tesla. Doesn't mean much, right? Until we compare it to something. Well, 90 million is the average. Wow, so that's 52 million shares more. That's like over 50% more volume. Doesn't that mean there's some excitement around it? Isn't it the basis of the financial market? If there's a lot of action, right? A lot of activity, price is going to move. I mean, that's the essence of the financial markets. Doesn't matter if it's stocks, ETFs, futures, Forex, doesn't matter, right? Cryptos, ooh, scary word now, right? Cryptos, right? Buying activity. This specific visual layout answers the question when. When do we trade? What is identified in the pattern, okay? But the timing of the event, the actual go, is when we have vertical up and down alignment. Now, this list here, it's interesting, this list, because this list is your list. I haven't filtered this. I haven't created this list based on a specific type of trade I want. So ultimately, when we go through this list, this is where overtrading comes in. If I just want to trade, TZA here, well, I mean, I do like this pattern it's on. Lucky enough, I do like the pattern. But if I'm like in a mid stage of a trend, okay, I'm going to explain that. That may not make sense for some of you, or may not be put in the words I just put it in. I break down a trend in different stages, okay? What that does is helps us to stay clear of potential roadblocks in a trade. What I found to make it simple and repeatable is to focus on the highest probable move. The highest probable move is typically found, and at a high percentage, at and near the reversal point. you see when a trend runs, and let's get a trendy chart. Oh, let's go to American Airlines. Okay, let's go to trend. And I'm gonna go back a little bit here. Let's go back here. Okay, so this is American Airlines. What I want you to see and follow is the initial, and then we're gonna talk about all of these other moves, okay? Because this trend took off here, this is November 2020, and then ended here. Okay, the end is crossing. Okay, we crossed up, we crossed down. That's a trend, an entire trend phase from this cross. So we'll call it here. We'll get some goal lines. Okay, football season. Here's our goal line. Okay, so this is the trend. Okay, this uptrend. At the point of reversal, that's the initial. Okay, that's the start. It's the giddy up. Okay, it's getting its momentum, and that's what you're gonna see. Go to any chart of your choice, put the indicators as I have them on here, and go back. I know you're gonna do it, right? That your curiosity starts to spike, and I want you to go through and do it, and go back to these reversals and look at how large that move was, and then look at the next moves. So to understand the next move, all you have to do is identify extensions, retracements, extensions, retracements, extensions. I go into this in a ton of detail. I've got a live trading session that I host twice a week live. It's about 2.5 hours these days, right? Where I teach this current market stuff over and over and over again. So this, look how clear this is, right? You have an extension, right? See how there's not a lot of up and down movement here, right? This is that initial move. And then you have a second one. That's pretty nice. You have another one, but watch what happens here. And this may be a little complex, and this is where my teaching comes into play. But I think you all are tracking well with me. Watch and notice how close these highs are. This is a secret. Well, no longer. But I always look at the momentum, and I want to see how strong a trend is. Okay. So one of the simple ways I like to do this visually with my traders is I like to show the distance between the highs. Okay, what you're going to find is like the longer you're in a trend, the tighter and tighter those highs become. It's almost like it just can't get up again. So one of the simple tools I use is a measurement tool. So what I'll do is I'll just go from this high to this high. See, it's a 16.85% move from this high to that high. And then as we keep it going here, you're going to see that number get tighter. That's 3%. It's a 12%. And then this one goes down. Okay, so this is obviously a sign of a reversal point. Okay, when you start to get tighter and start to go down. This was the biggest move. This is 16.8%. I mean, this is your guys' list. We can go and show this on other lists. But those highs get smaller and smaller and smaller, the distance between them. So when I look to where I want to trade is at the initial reversal. It's a clear runway. Okay, I don't have to worry about resistance, and I don't, if any of this is over your head, it's okay. Let me know. If don't feel bashful. No one can see your comment. They don't know it's you. Okay, it's private, so I won't put you on won't put you on the webcam, anything like that. You don't have to worry about that. But does that make sense? Type in a yes if this makes sense. Do you see how we just can't get high? It's not as fast up, right? It's not such a wide separation. That's typically a sign of that trend losing momentum. Do you think that's beneficial? If you're buying American Airlines in this run here, and you start to see this, more than likely you're going to start thinking to yourself, man, I probably should take some profit. I probably should just lock it in and maximize my trade. I mean, this is powerful stuff. I started to really show this in the last couple of weeks with my traders, because the market dictates this, right? So whenever I teach in class, it's all, we're in the live market, so it's whatever the market is, whatever the condition is, that leads to teaching, training, and coaching. So ultimately, this to me is an objective way to see it, right? To see the slowdown. I have a lot of fun with this, okay? But that's The only reason I really wanted to bring this up is because I didn't want to make it too complex. I don't think it's complex, but is to talk about where in a trade you want to be. And you can go, go back and look at this on your favorite chart. I mean, you go to United Airlines, another peer to American Airlines. I've never really been a big flyer of United, but more of a Delta guy. Okay. Take a look at United Airlines. This is some analysis. This is actually a signal that was sent out a couple days ago. I'll talk about that in a moment. Okay. But let's just talk about this. I just want to hide those so they're out of our way. This is the reversal point. Okay. This is the reversal. Right. We were, and I'll put these away for a second. I'll hide those 10 and 20s, right? See this reversal, see that extension, right? See how wide this went and it started to peter out, right? The momentum does not want to push us up. You see how close these highs are? That's what turns into a double top. Okay, that's a sign of a lack of momentum enthusiasm. And it happens on the bottom too, on the way down. See this extension? And then look, we got hung up on this support, right? So you couldn't even take out this high. I mean, this low, excuse me. It works both sides, right? It works both sides. Momentum is a powerful tool. Yeah, so the question from Jerry is, can you put a momentum indicator on the bottom? Yeah, you can. I'm just not, I've never messed with the momentum, quote unquote. I use volume and I use a moving average as shown here. So I'm looking for a relational shift. I want to see a spike. I want to see where the volume is. And this is just high volume. I told you there's a spectrum of low volume. So they both tell a very important story, but not independently. I love audiobooks. Good example. I love audiobooks. They're easy to consume, right? You could be driving in your car, and, I got a truck, but you get my point, right? I can be working out in my garden and I can just plug on my headphones so I can listen to an audiobook, right? That's nice. But that's one way to consume literature. Another way is to actually read a book. Well, one of my great friends in life taught me a valuable trick about consuming literature. He says, read the book and listen to the audio at the same time. He's actually in the room, Alan. He's helping moderate. You actually read the book visually, like have the hard copy, soft copy book in front of you, and you listen to the audio. So it's a different dimension of consuming that literature. If you haven't done it before, I definitely guarantee it. Same thing here, right? I get a lot of data, right? Looking at the top of the pattern, but I look down below, I can get data, but when I put them together, I have a different experience. Yeah, so it goes, Brett goes, yeah, earnings are both followed by a big red volume spike. Yeah, earnings, it plays a part in volume, 100%. Yep. Now, the colors to me is less relevant. I always get that question. Well, it's red, it's green. Okay. I'm not really worried about the color down below. In fact, my traders just don't like the look of it, but I could have this gray. I mean, it doesn't really matter. I'm not interested in the color down below. The color is just defaulted to match whatever color's up. I'm not using this for trend direction. I'm only simply looking at a relationship. Is trend of the volume going down or up, right? So I see holistically, okay, volume's coming up. Oh, volume is really coming down. It's the trend line down here. Look at how often the volume trends on an individual stock. Okay, volume is not flat, but you can see how volume spikes and then it comes back down, right? There's relationships there. There's intel, not the stock, not the company. Okay, I'm talking about intel to this data. Now, I'm not going to go down that in too much detail after that, but ultimately, I don't want to go down that hole. But ultimately, I want to see a shift. Okay, something's bearish, and then it goes bullish, and buyers in a buyer's frenzy. There's a frenzy of buying activity. Okay, that is what creates momentum. A spike in momentum. I want a quick run of momentum. That's a breakout. Okay, same thing on the down move. Same thing on a down move. Okay, bearish volume, boom, rocket ship. Same thing. So the world would be a lot easier if we would focus on finding these moments of time than trying to manage through 2, 3, 4 patterns in, right? 2, 3, 4 wave patterns in. I mean, that's where chop happens. Look at the chart for United Airlines. So starting back here on November, so we're talking about 3 weeks. You see how tight this trading range is, right? The movement was back here. The big bullish breakout was here. Okay, so if you find yourself over trading, we're buying United Airlines in this traffic, no pun intended, right? Airline traffic, but ultimately, right, there's not much action. Okay, the action was here, and you'll see that. We'll go to Kroger. Okay, see this initial action, this surge. Okay, surge, right? Move, like boom. Okay, this initial period here. Okay, same thing on the down move. Okay, every chart, it's like I said, starting off the event today. I mean, I haven't seen an argument yet that someone that can show or tell me that high volume does not move the market at a higher percentage. I mean, I've just pulled too many charts for that to happen. I've done it too often. I got to go back to default because I can't stand the dark colors now. There we go. So volume spike. Okay. Now that's why where a chart is, where a price is in relationship. Now I've just got the 50-day. I don't have anything else but the 50-day moving average. But I want you to just see visually how and what it looks like at the point of reversal. Okay. Let's go to another one. Let's go to NIO. Let me highlight some of this analysis. These price points. We can always come back if you got a question about them. But let me just get into same conversation with NIO. Is this the latest price? Yep. Okay. Scroll out here. Look up and down. Was there a volume spike? Big bearish bar flipped. Broke the trend line. Look down below. Boom. Look what happened after. Up move. Look down below. Big volume. Same thing back here. It's set the move, right? It had this initial side. Now, we don't need to. Many of you maybe go, man, I got to look at all these charts and try to find one at the time. No, we don't have to do that. Remember, we have filters, right? This list of 32 down here, I'm going to go into, and I'm going to show you what the chart looks like. Because what I've done is I've built a specific search. That's basically what filters are, right? I'm creating filters to create a search, an automated search based on data that the software then goes and finds the stocks that checks the boxes, okay? So I don't have to sit here and analyze chart after chart after chart, finding a stock to trade. This does the heavy lifting, okay? So this is, I'm going to break down what this all means on here for you. Now you can take a screenshot of this if you want. There's a way you can take a screenshot by getting out of full screen, like the GoToWebinar viewing window, exit full screen. And then when you do it, look on the top of the like TV screen, almost looks like a TV monitor inside of your monitor. There's a camera. Take a picture of the camera. You just click it and it'll take a screenshot of whatever I'm showing on the screen. So like if you want this, go ahead and do it. I'm going to show you the full checklist in a second. But this is my criteria. I'm looking for these items to be hit, right? To be met by the stocks in my list. Now they all do something very important. Yeah, this is recording, my friend. Yep. Okay, so I'm going to break this down. When I think about something I want to trade, right? Something I want to invest in, something I want to, buy, something I want to sell, I think of in terms of how liquid is it? Is there momentum, and is it in the right trend? That's all I really want to know. I want to know, is it at a potential breakout? Does it have liquidity, right? Is it potentially have options. Okay, so most common stocks that have a specific amount of trading activity have options. Okay, so this is also a way to help find optionable stocks if you like to trade options. So let's talk about the first thing I brought up was liquidity. Market cap. Okay, so I've got a market cap criteria. I'm going to get a different color. That's not working for me. Let me get a different color so we can see this easier. Let's do black. Okay. All right, so market cap, to me, that's for liquidity. So 200 million is a definition, the small side of a small cap. So this is small caps or higher. So small cap, mid cap, large cap, mega cap. That's what this is going to pull. So they have to be a minimum of a 200 million market cap. Volume. Okay, now we're going to talk about volume. This is liquidity. This specific volume filter is based on the most recent trading activity day. So that's today. I only want to trade stocks at a minimum trade 1 million shares, 1 million in a day. That's liquidity. Average volume. This is over a 60-day period. So the way these two volumes work is that you can get a spike. A stock could spike in one day to 5 million shares, but the average is only 200,000 shares. Okay, I don't want that. So this average volume works in conjunction with this volume, so we don't get these, wacky low volume stocks to look at. Okay, but 3 liquidity settings. Relative volume is the momentum. Okay, so the calculation for relative volume. Now this is proprietary. The formula is you can't change it with TradingView. Some other platforms you can change it, but for this one, the way it's measured is it takes today's activity, whatever the most recent day is, and it divides that against the average trading day. Divides it, and you get a factor. So 1 is 100%. So if something trades 1 million shares on average, and today they traded 1 million, that is a factor of 1. If a same stock trades at 2 million shares and it averages 1 million, that's going to be a 2. It's a factor. So when I have relative volume above 1, that means I'm only seeing stocks that traded above their volume today. It's a momentum filter. Now the only pattern I have is the final filter. Price crosses down on the moving average 50. Pattern. So we've got pattern plus momentum supported by liquidity of the stock itself. Pretty neat. So there's a list, 32. When we go to these charts, I'm going to pull them up. Remember I talked about the list, this watch list you all gave me? That's your list. I don't know what stage they're in. I don't know if they're ready for a breakout, if they're not ready for a breakout. Okay, I don't know that. With this list down here, these are at a pattern and momentum combination right now. So I'm going to get rid of that watch list. I'll bring it up if we need it again, but let's get to the chart so you can see the pattern. So this is what we asked for. We wanted to see the price crossing down on the 50-day. Obviously, Google is liquid, right? Obviously, but we set the parameters. And we had a volume spike at that moment. Okay. Remember, oh, there's another moment. Right? There's the class A. It's going to be almost identical, right? There's class A, same thing. Expedia. Just look at the charts. I'm going to put this on auto. There we go. See the breakthrough here? Get off auto. There we go. Okay, reversal point. Now, not all of these are created equal. Okay, so I have a checklist to pick which one. Okay, even though there's 32, not all 32 have the best, room for profit. Okay, they have the best, open runway, which I'll show you. Okay, but this is exactly what we're searching for. And then from here, I take a list like 32 and I just smash through them like this, and I'll go and I'll simply look up top. Now I'm going to show you what I look for. But I just take this short condensed list and then I start looking at which has the most opportunity. And I'll show you how I do that. But look at the pattern. Okay, all of these in this list are basically at the same point of time at that breakout moment that I've been walking you through. Same process happens on the opposite side. Okay, so we're looking for bearish breakouts. So these are down moves. Okay, well, the opposite of a bear is a bullish from me, and that's aggressive bullish. So now we have less on this side, right? So think about this. We have 7,000 common stocks. Okay, so I ran the aggressive bearish breakout, and there was 32 matches. Well, here there's 14 matches on the bullish side. So in short, which side do you think the market was moving? Well, there's more bearish moves. Okay, so it's another way. When the market's breaking out and actually extending, you can pull this list up. There could be 80, 90, 100 stocks or more in this list. So when I see small numbers, I also think small number means the market's constricting, right? It's in consolidation. It's in a triangle pattern of some sort, right? It's in a transition. It's not actively extending. So we have a low number of stock trades, okay? But now the opposite. These are going to be the opposite look and feel. So if you like to buy, you're going to see these charts, but it's going to be flipped. So now you're going to see the 50-day coming up with volume. Crossing up. Crossing up. That looks like a good trade for Archer Daniels. Holy cow. Right? Opposite. Okay. Opposite way. Now, part of the trading signal program it's called the rapid profit method, is where I go in and I cherry pick trades from these lists. But I only send out one, possibly two, depending upon what's happening in the market a day. Okay. But my traders have access to this list, and they'll take the list and they'll trade them themselves, right? Because I teach them how to, the setup's identical setup, and they actually participate even more if they choose to. Okay. And they'll trade things that, I try to stick to, $80 or less stock prices to, $10, but some of my traders like to do more larger transaction sizes, things of that nature, right? But they have this list too. So the power of this is that what I see, you see. What you see, I see. And so ultimately what happens is we have a lot of synergy to what and how we identify the market. I have traders all the time in class go, man, look at this one. I'm like, oh yeah, that's another good one on the list, right? We're seeing the same things through the same lens. That's powerful to teach and to repeat, because this filter, once you set it once, it's yours forever. You don't have to change it. But the patterns here is at a breakout point. Now, like I said, this is just using one indicator, okay? The other moving averages add dimensions to the equation. They help us time profit targets. They help us identify stop losses. They help us also identify counter trend moves, which is more advanced stuff that I teach. Okay? But ultimately, the power of this process, as you can see, if I remove all of these, okay, I'm going to get rid of these. Reset all, probably faster, right? There's 18,605. But I think we're all smart enough to know that not 18,605 tradable symbols should be traded right now, right? I mean, our goal when we want to trade, okay, we don't have to trade all the time, right? But when you individually want to trade, you have a focus list. And this is just one list of 4 different types. Plus I have others that I give out as the market dictates, okay? But you always have a specific mechanism to repeat. Now from here, the question is, where do I get in, right? So the first thing we've done is, to me, if we think about the market, whenever we want to trade, Bumbles just happens to be on the chart, folks. I'm not it just happened to be the chart, okay? So I've got what, I've got the when, I've got the how. These are, to me, the 3 most important questions to answer. What are we going to trade? When do we trade it? How do we manage the trade? So if you can consistently identify and focus and have a focused approach to the what are we going to trade? From there, the when, okay? Now, if you have a consistent method to know when to set up your trade, and then have a plan to manage it, right? Profit targets, stop losses. That is answered in this entire flow. So the next step is I want to now introduce entry strategy. Okay, how do we actually catch the breakout? The phrase or the words that is most important is a distinction. Okay, catch versus chase. Catch a breakout, not chase a breakout. Yeah, you should have the screener on the free version. Yeah, it's down here, stock screener. Should be on the bottom here, Doug. Should be down here. Yeah, because I used the free one for a long time. The reason I paid upgraded is so I can have all these watch lists. You can't have a watch list on the free account, but we've got watch lists for sectors, industries, different types of stocks that we manage and trade. Catch versus chase. Okay, when I think about entry, I always go back and I use the story of Goldilocks and the three bears. How was the porridge, right? Well, porridge was too hot, too cold, or just right. Same thing I think about entry strategies. Entry strategies, the difference is you're either too fast, too slow, or just right. Okay. So the timing of the when, you're chasing if you're too fast or too slow. Okay. Too fast means something took off and you're chasing it. Too slow means you're buying at the high. So catching a runner, trying to chase a runner, right? A stock that's breaking out actively in a day, right? Like the market's open, right? And you see a stock price jump 20% and then you buy it just because it's going, right? Ultimately, what's happened is everyone that bought it, that created that huge double-digit gain, is going to eventually be taking the profits off, and you're going to be the one holding the bag. You're going to be buying their profit, right? It's a net sum game, right? When you're buying, somebody's selling that stock to you. When you're selling, someone's buying it from you, right? That's where the phrase, right, got caught holding the bag. Well, that's because you're buying too fast or you're buying too slow. Okay. So what I like to do and what I teach and what we do in our Market Pro Life Club and our different various trading sessions is we catch breakouts. Okay. So how we do that is we use pending entry orders. I got a question on why volume at 20. So going back, why is the volume at the 20 moving average? My middle trend line is a 20-day moving average. Okay. So it's the mean, it's my middle trend. So my middle trend line is 20. My volume down is matching it at 20. Okay. If I'm using another combination like a 50, 100, 200, my volume is at 100. I want to have the middle match up with my volume on the bottom. Whatever combination I use, it's always the same. The middle is always the volume on the bottom. Okay. It's a synergistic way to mathematically line up your charts. Too fast, too slow, just right. Okay. What we're going to do is we catch trades. So to catch, we have pending entries. So essentially, it's 8 o'clock Eastern time. I'm in Florida. You can tell probably what, close enough. It's 70 degrees in December. Okay. I'm in Florida. Catching breakouts. Okay. This is what it looks like. I'm gonna do a buy side. Okay. It's easier to show people typically. Buying, people recognize that. Now, like I said, not all of these are created equal. Okay. So I'm gonna give you let's go beyond meat here. Okay. I'm going to give you a trade setup that would be one of the check boxes that would make sense on an open runway, which I'll explain. Okay. First off, let's talk about what we just found. All right. Beyond meat, look to the chart. We had an initial move here. Okay. I'm not going to go too down the road. Just listen to the term. Initial breakout point here. See the retracement. Then we had another move with volume. That's the secondary. Initial, secondary. This happens a lot. You see a reversal bar with volume below, and then it retraces, it tests it, okay? So it's testing, the bears are testing this bullish move, or AKA people are taking profit, so that's sliding the price down. Then you get the second move. The second move is usually the larger move, okay? So this is a secondary entry opportunity for Beyond Meat. And we had a spike in volume. See the spike? Okay, so this is catching a secondary reversal point. This is an ideal. Of the two, I always try to find the secondary if I can. So what we do is we want to catch a breakout. Not today, the market's closed. This is when I trade. All of my trade setups are done after the market closes. All I'm going to do is simply find the high. So the bar today high was $15.69. I'm going to sit on top of that, one tick plus. So I'm just going to sit on top, one tick above. This is a breakout. This is how you catch a breakout. All right, this is like trading double tops, trying to catch a breakout of a trend line of, I mean, it's common type of thought process. Now, how we apply that, we use this also on options. Okay, so we can also trigger an automatic trade on an option with this underlying stock price. So the high today was 1569. For us, what is the definition of a breakout? What would a breakout look like tomorrow? If you pulled up Beyond Meat tomorrow and we hit $15 and you pull up the chart, what would the chart look like to be a defined bullish breakout? What do you think it would be? What would the chart look like? Where would that price be? Price would be going up, right? That would be a breakout. A bullish breakout means price would be running up, okay? It'd be green. So for us, that is why we want to sit and catch it. Okay, so it's basically, you know, think of fishing, right? You can have the greatest rod and reel, right? You have the best bait, right? You hired the best captain out there, and you want to go catch some snapper. You know, I'm in Florida, so snapper, red snapper, right? And if you're not in an ideal place to catch it, you're not going to catch the fish. Okay? So what we want to do is be in an ideal place to catch the breakout. So rather than try to smash the market order as the market's going live, what does that require? Well, it requires you to be in front of your computer or on your phone, right? And then having to pull it up and then hit the go button. Well, for me, I like to have an arm's length mentality. Because what that does is it helps minimize the emotional impact, manages the excitement, manages the anxiety. So by setting trades up like right now, which we're about to do, is there's no market noise, right? Market already did what it did for today. I'm trying to catch a breakout based on what happened today for a pending breakout tomorrow to fulfill the pattern. It's not fulfilled until it actually breaks out. So we sit and we're just waiting, and it's the orders waiting in our account, and all that has to happen is Beyond Meat has to mark at or above $15.70. And what that happens is it's going to take me into the trade automatically. So what we do tonight, I'm going to set it up right in front of us so you can see the process. And if it hits tomorrow, it's going to go live tomorrow. In fact, it's going to have a stop loss. It's going to have a profit target. Everything's going to be fulfilled. Everything's going to be already preset. And I don't have to touch it again. Catch, okay? Now, I always trade using a stop loss profit target. If I'm buying the stock, okay, I'll have multiple profit targets. So the simple way I teach profit targets is on a buy, I'm gonna go back and find previous resistance. And the market likes to be and go where the market's been before. It's a time-tested phenomenon in the market. So I'm just gonna go back and I'm gonna find the latest highs, and I'm just gonna plot them. Now, some of these I may set up as a profit target, some may not. I'm just going to go through and set these up first because I want room. Okay, I want some wiggle room to let this chart go before I start taking my first profit. Okay, but I'm just going to go back and I'm just going to quickly identify support resistance. Now, of course, if you're not familiar with this or not confident doing this, don't worry. I've got pre-recorded lessons on this that I give to every one of my clients, about 10.5 hours of how to drive this strategy that I'm sharing with you today. So I just picked the last 4. We got 1 here. There's 2, 3, 4. I'm picking the next highest resistance point, okay? That's how we get this basic grid pattern here. Now the stop loss, the simple way I teach it, there's obviously other ways I teach, but the simple way is we find the latest low and we sit 1 tick below it. Okay, so now we're sitting 1 tick below the latest low. Now this is not official low because I don't have another bar yet, but this is a low we're going to use because I am below also these trend lines, okay? But I'll get into that more into class. I don't want to get down too far talking about the 10 and 20 and how they relate to each other yet. So based on this, I tend to be a little bit more aggressive with my personal trading. So at this point, I'm really not going to exit at this first support resistance. What I'm going to do though is I'm going to expect the market to come up here and then retrace. So I like to define these. So when I'm in the trade, I'm not caught off guard if we come up and it comes down, right? Support resistance happens. What is resistance today will turn into support into the future. Okay, that's why I have it labeled S/R, support resistance. Once again, I don't want to get too far down the rabbit hole. But ultimately, I'm going to leave this here so I'm visually expecting, another word I use a lot, expectations. I'm expecting the market to come up and then come back off that high. I think it's going to come up. I'm going to expect it to come up here. I'm going to expect it to come here and then start going up again, okay? If it does break this initially, which it can happen if it's a fast move, then at that point, it's going to turn into support to build up to this price. It doesn't go in a straight line. So in fact, I'm going to use this as profit target 1. So I'm just going to change this to profit target 1. And then I'm going to change this to profit target 2. Now, these become my guiding light in managing this trade. Now I'm going to take a little longer than I normally do. It takes me about 30 seconds, 60 seconds to set this trade up. But I'm going to walk you through how do we take this and translate it into a trading account. Well, I use Thinkorswim. That's my broker I've used for a very long time. This is what we also use to track all of our trades and all of our programs and in all of our classes. So I'm going to take these details, the entry, the stop loss, and the first target. And I'll explain, I'm not going to set the second one up yet. I'm going to set the first target, the entry, and the stop loss. I'm not going to do the second one because to get to the second one, we've got to hit the first one, okay? So I'm going to pull up Beyond Meat. And the method I'm going to share with you now, the process of setting up this type of trade, it is simply a one cancels the other. It's an OCO bracket. That's all it is. This is widely available on almost every broker platform that I've come across. Okay. Again, I have traders all over the world and probably about 8 to 9 different broker platforms are used in my sessions, in my classes. Okay, so, but this is the one we use for tracking and all that good stuff. So effectively what I'm going to do is I'm now going to come up to the underlying stock because we're going to buy the stock, set up a stock trade. I'm not going to buy it yet. I'm going to set the pending entry order up. So I'm going to come to the ask and I'm going to create an OCO bracket. Once again, your platform, it'll be different buttons, different location, but this is widely available in OCO bracket. Once I do that, you're going to see now 3 orders pop up. This is all associated with 1 ticket. So it's going to be a 1 ticket trade with 3 orders. Now, I'm going to drop my shares just for tracking, but I'm going to use 10 shares, initial buy. The initial buy, I'm just going to put in 10 for tracking purposes once again. Now, this 10, look at the second one I did. Okay, see how it says -5. So effectively, the red entries here, the red trades, right? These are trade details. So the green is the buy. Okay, so that's the initial entry. Then I have 2 exits. I have 2 sell orders. Okay, so for every buy, I have 2 sell orders. The first one in green, of course, is what I'm going to buy. So I have 10 shares, right? But the profit target is this second ticket. You see, it's a limit order. Okay, that's my profit. I'm going to take half off at the first target. So I'm gonna buy 10 initially. If it hits our entry, I'm gonna automatically trade and buy 10. If I hit my profit target, I'm just gonna peel off half my profit. I'm gonna lock in half the profit. So I'm gonna take the 5 shares and I'm gonna sell it at the profit target. Lock it in. I'm gonna leave the last 5 to trade towards the second target. So what I'm also gonna be doing is I'm gonna be moving my stop loss up as this trade goes. I'm not gonna use a random percentage. I'm gonna use objective stop loss placement. If this is a signal I sent out, which I may because I like to set up, but if this is a signal I'd sent out to my clients tonight, then I would be updating the stop loss for my traders so they have an active stop loss to manage. And what I'll do is I'll just trail the lows. I'll follow the lows all the way up. So if it does reverse, we're going to be above our entry order, so we'll be in the profit. Okay, so those are different techniques of how to maximize a profit on a trade. So ultimately, the goal is to get to a guaranteed profit scenario mathematically, meaning we closed out half at profit, booked it, and then our stop loss goes to break even at a minimum. So that way, if we do U-turn, we get stopped out at break even. We don't lose anything on the last half. We made our money on the first half. Okay, it's a way to really extend your profit and minimize risk. Okay, so coming back here, now I'm going to set up the ticket. Okay, all I'm going to do is take these orders. So $15.70. So that's the entry. So I'm going to change this to $15.70. Now I've also got to change the order. Right now it's a limit order. Okay, a limit order, just quickly, if you need more information, need more help on this, don't worry, I've got lessons like I've said around this. A limit is going to get you at the best available price. So $15.70 or less. I don't want or less. I only want this if it is above $15.70. I'm not trying to buy it cheaper. I'm trying to buy a breakout. So we want to change this to a stop. So a buy stop order means that this is the floor. That means we're only going to buy it if it's $15.70 or higher, because it could gap and run. Okay, so I don't want to miss the run if it doesn't precisely hit it. So if it opens at $15.75 and never comes back down again, this would catch the trade. Okay, if you want to limit it, some traders of mine want to limit the buy, then you would use a stop limit. Okay, but you know, like I said, these are things I teach, these little nuances. But ultimately, we're going to go with the buy stop. Okay, so if tomorrow, and it's going to be only for tomorrow, it's only active for tomorrow. If Beyond Meat does not break out and hit 1570 tomorrow, this trade will automatically cancel. I don't have to go in and touch a button. I don't have to do anything manual. It's going to be automatically canceled because of the time frame I set. It's only good for the day. Okay, the second thing I do is I set up my profit target. Okay, I'm going to go to the charts. 2333 is my first target. Then I just simply type in my first target, and this is going to tell my broker to sell 5 of my shares at $23.33. And then I'm going to put my stop loss so I can minimize my risk. Okay, so that's going to be $13.10. So once I put all this in here, I'm going to show you what it looks like, and I'm going to make 2 adjustments before I show you the preview. I always want to make sure I tell my broker precisely what to do. I've never had a problem, but I just always want to be precise. So open order, closing orders. The second thing I'm going to change is the time frame for my stop and profit target. My entry is only good for the day. Now I give out specific dates for how long a trade is active. Sometimes I'll say this trade is good for 3 days. Most of the time it's 1 day. So the entry is only valid and available for tomorrow. Today's the 7th, this is for the 8th. But if I go live, if the trade triggers and buys, then these 2 trades will be there till one of 2 things happens. It's a one cancels the other. Either you hit the profit target or you hit the stop loss. Whichever one comes first will cancel the other order. So this is what it looks like. So this is 3 orders in 1 ticket, fully protected. Buy side entries in there. I've got a stop loss. I have a profit target. Nothing's open to the market. Nothing's naked to the market. I have an exit on both sides. I'm bracketed. So order number 1, we're going to buy 10 shares of Beyond Meat at $15.70 or more. And that's only good for tomorrow. If this goes live, then I want to have 2 sell orders, 2 closing orders behind it. Bracketed, always protected. So from here, I'm going to take a screen grab so I can have this for tracking purposes here. So I'm going to grab that in a second. Okay. But this is what the ticket looks like. It's 3-in-1. Okay. It's a powerful way to set up trades and not have to babysit your trades. You don't have to do it all the time. To me, it's a powerful, repeatable. You just set them up and then you're hitting send. Okay. So once I hit send, it's then going to go into my working orders. Okay. Which is up here. So now you'll see it's in my working order section of my account. And it literally says time place, it's 8:26. Here's my entry. Here's my 2 exits, my closing orders. And it says it's working. Okay, so this is a pending entry order. And then my 2 exits say waiting on the trigger. These will not do anything until it is fulfilled, means it goes from working to actually filled. You see down below, I have all of these other working orders. I always have, with every single trade, 2 exits per trade. And that's where you see this huge list of exits. And because they're always working, always protected. That's a trade ticket, right? So now everything's set up. I don't have to do anything tomorrow. If it doesn't hit 1570 tomorrow, that's fine. It's a missed entry. So what does it look like? Well, that means that the market went down. It didn't break out, so I don't want to trade it. That's why it's only good for tomorrow. I'm trying to catch a breakout. Very similar. If we go back, you can see this breakout, you got volume. Okay, next day caught, then we get our bullish move. Okay, I don't know what, God, this thing was up at 120 bucks. Look at this pricing. Same thing back here. I'm just showing, look, see the bullish breakout? You can see it go back in time. Volume, break, catch. And that's just one of the 14 that are in this list on the buy side. So same thing on the bear side, but it's just inverted. Now I don't like to short stock, so I always do a put, I like to buy puts if I'm going to go bearish on a position. Okay. So same process. So it's just inverted. But the beauty of this process is that once again, we're objective, found the opportunity, set it up. Now, once again, in my program, I send all those details to you. And you don't have to, but at the same time, if you want to learn to do it yourself and follow along in my sessions that I host every week, right? This is the blueprint. And so what happens is you actually have a step-by-step checklist. Once again, simple and repeatable steps of trading. How many of you like this process? Does the process click? Type in a yes, this makes sense, this process I just went through. Is it making sense how I set the entry, why I sent the entry there? I'm gonna go back to the actual trade, okay? This is, I mean, think about it, right? Most, you're sitting in front of the computer, you're hitting the button, right? Right. Remember what that feeling is. You're sitting there watching, you're like, oh, should I do it? Should I not do it? Right? There's almost like your hands get clammy. Look, it's 8 o'clock at night. I mean, I have no stress. Obviously, this is something I run all the time, but ultimately, this is what took place. Okay. I've already shown you. I mean, I can only show you so much in the time I have tonight, but I know you're going to go to your charts, pull the system up, put these indicators on it, go back to whatever chart you want to look at. And you're going to go back and start finding these reversals, and you're going to start looking down and you go, man, look at that breakout go. Man, that wasn't crazy. Look at this move that happens. So all we're trying to do is emulate and get in front of and catch that pending breakout move. I got a question. How do you handle gaps? Well, this ticket will buy at the gap using a stop order. If you don't want the gap, then you would use a stop limit order. Okay. So there's other ways to leverage, your personality. If you don't want to deal with the gap, then there's order types to avoid that. Right? But I teach that process. It's all a comfort level. Now, interesting enough, I'm going to go a little faster. If you wanted to trade the option, let's see. I got a question from Rocky. Did anyone try to order from phone through Thinkorswim? Oh, this order type? It's been a while, but I can record one. I'll record it and post it. I'll do it on my phone for class. Let's see, Jerry's got a question. If your buy does not get filled, is it possible that your sell stop gets filled? No. So the specific status, you see this waiting to trigger, waiting to trigger. This is all one ticket. You see how this is locked in here? So there's a key. This is how Thinkorswim does it, but your broker chart is going to look different. But you see this is one ticket, and this is a contingent, it's basically a contingent order type. So it's all on one ticket type. These red orders are not active at all. They're not even in the market until the buy executes. The waiting conditions here, see, these are active trades. This is a GE put. This is waiting conditionally. That means it's active. It's waiting on the condition. Well, what's the condition? Well, the condition on the option trade is that GE marks less than or equal to 76.25. This is an exit on an option trade, on a put. That's the profit target. You see it says waiting conditionally, right? A stock will say working. So this is a stock trade for Gurn. It's a working order, okay? These two mean the same thing. It means it's in the market right now and it's active. Waiting on a trigger means it's waiting for the initial buy to trigger. So it's not even in the market until this goes live. It's one or the other. How many of you trade options? Type in me if you trade options. Anybody in the room? There's always quite a few, always, right? It's like a loaded question. You know, sometimes I could be surprised. Okay, a lot of you. All right, so what if we did the same thing, trying to catch a breakout, but we traded the option? Well, we can. The work's been done already. We already found what to trade, when to trade it, and how to manage the trade. All we have to do now is to pick the option to go with the breakout pattern. That's all we have to do. So to do that, I'm going to share and pull up a simple checklist. If you trade options, you'll be like, man, that's a simple checklist. If you've never traded options, you're going to be thankful it's a simple checklist. So this is the aggressive bullish checklist here. Okay, this is what we've been doing. If you want to take a screenshot, go ahead and grab it. It's on me. Let me zoom in for you for a second, get rid of my bookmarks so you can see more. Okay? Let me zoom in here. So aggressive bullish checklist. Here's the trading view filter settings, so you can find them just like I had below, right? These are the settings that we found Beyond Meat with. Here's the stock trade setup. Okay, I say trade setup because if you trade the stock or trade the option, you still want an entry, you still want profit targets, you still want a stop loss. So there's step one, set your pending entry one tick above previous bar high. Set 2 profit targets using previous highs. We did that. Set stop loss level 1 tick below previous low. We did that. Now, all we're going to do now is select the option. So we're looking for a delta 65 to 75. What that does, it gets us into the money. So we're in the money starting off the trade, the strike price. Okay. I want liquidity on my option, so a minimum criteria is open interest greater than 100. The more the better, but 100 is a minimum threshold for me. I want to make sure there's activity on that option chain. You know, look, open interest is the same for me as volume is on the stock. Okay. Expiration month, we want a 45-day to 90-day buffer to allow the trade to go, because this is a swing trade. Okay, so remember the average hold time for me is about 3 weeks. So some go 30, some go 5 days, some go one day. It depends on how fast the breakout is. So ultimately, we want enough time. We don't want to buy too much time, right? Then it becomes overly expensive on the premium. And then we want a spread that is less than 10%. Okay, so 10% between the bid and the ask. That's it, 4. So ultimately, when we come down to the option chain, it puts us right in January. I go to open interest. I've got a simple layout that I have, my template. So it's got my open interest. Do we have more than 100? Yeah, we do. Now 65.75 is the ideal place. Not every option chain has 65.75. So what I do in that situation is I'll go to the lower of the two, right? So you've got 59 versus 81 delta. If you don't know what delta means, once again, I've got lessons on all this fun stuff. And I just want to double check the spread. So the spread's basically just underneath, just at 10% roughly. Okay, so that checks my box. Now there's different strategies I also teach about, when do you want to be in the money, out of the money, things like that. Most of the time, if I'm sending out a trading signal, I'm going to be conservative. So I'll always be in the money or right at the money, whatever's the best ideal delta. So now we're sitting at a $15 strike. Okay, that's based on the checklist right here. Now, same process, watch this. So we're going to set up a contingent order to trigger the option. So same process, buy custom, OCO bracket. Now I'm just going to the thing with the options is because we have time, we've got to worry about time, we have an expiration. I don't go to the second target, I'll just use the first target and I'll get 100% out of the trade. Okay, I don't use multiple profit targets on options. I like to have one defined exit on both sides. So that's why they're both the same number. Now here, I'm going to set a market trigger order. If you know what that means, then you know what that means. If you don't know what that means, don't worry. Once again, I'll teach it to you. But what we're going to do now is set up a contingent order to trigger the option buy, so buying a long call based on the breakout pattern of the underlying stock. So same price points. So I'm going to do a market order on the option. Okay, this is the option premium on top. But down here it says condition. So what I'm going to do is I only want to buy this contract, these two contracts, buy the long call if Beyond Meat marks at or above $15.70. That is going to create a contingent order around the underlying stock. So if the stock breaks out, it'll buy the option for me. Now I'm going to come in and set my stop loss. So same thing up top. This is going to be just like this stock trade, good till close. I want a bracket to minimize my risk, manage my exit, and stop loss is $13.10. So I'm going to put my stop loss in. $13.10. I'm going to now put in a profit target. I'm going to put in the target that we have on the board, $23.33. So greater or equal to $23.33. Now this ticket's going to look a little different. Okay, so watch this when I come into the confirm side, the ticket confirmation. Same three orders, but there's an extra condition because now we're talking about buying an option, but based on the underlying stock. Okay, so we're going to buy two contracts, January 20th expiration. Okay, there's the $15 strike price, only good for tomorrow. Only if Beyond marks at or above $15.70. It's the same breakout of the stock buy we did. And then we have our stop loss. So we're going to sell the two contracts on the condition that we mark at or below 13.10. That's the stop loss. Remember, whatever happens first, we'll cancel the other. And then we have our profit target. So now we not only have a stock trade, but we also have a fully protected working order on Beyond Meat. So same look and feel, except one's an option trade, one's a stock only trade. Waiting and working on conditions. All set up with a mentality and a focus to try to catch a breakout. That's the goal, catching breakouts. Now, as I mentioned, there's other ways we trade. Okay, I teach how to trade counter moves, right? There's lots of different ways to leverage this setup. You don't have to learn new indicators, you have to learn new moving averages, new volume, new entry strategies, new profit targets. There's just different styles of entries based upon conditions, but this is a primary method of trading. It's this identification. This is an aggressive trade. We have conservative trades. Okay, so different style trades based on if you're conservative or aggressive, bullish, bearish, that we identify and leverage. But the beauty of this process is that, to me, it is done with an arm's length mentality. We identify objectively pattern. We've got liquidity. We have volume. Okay, we've got a pattern reversal opportunity. And now we've got a trade ticket set. We've got a trade set up that's fully protected. Now, the beauty of this is if it goes live and triggers and you forget to ever come to your charts again to manage your trade, you know what? If one of them hits, you're out. I mean, it's going to fully manage your trade. What I also love about it is when I send out a signal to my traders, everything is delivered up front. Just like we saw here, we have everything laid out. We know where we're getting out for profit. We know exactly where we want to get out if we run into a stop out situation, right, where we lose, right? We want to get out. And so for me, what I love about the signal programs that me and my team have put together is that we focus on transparency. We focus on ease of setup. So that way you're not worrying and trying to run somebody down to say, hey, I got a trade, I don't know what to do with it. You know, it's all laid out up front. Not only the signals I send, but the method I teach is to always have fully protected trades at all times. Never leave a trade open to the market, because when you do so, you're making decisions on emotion. You're staring at P&Ls, you're seeing your percentage go up or down, and that's where people start to cut profits and let losses run, is simply because you're letting emotions kick in, right? This, though, we're not going to remove all emotions, right? That would be boring to remove all emotions, but ultimately, you know, we're spending more time enjoying life, enjoying the process versus being sucked in and being managed by the process every single day. So if it's new to you, many that come in an event like this is a new method, right? Not necessarily the trends, maybe not necessarily the volume, but how I put it together, it's probably different. But ultimately, the method that I think is most powerful is this in front of you, how we're identifying up front. If you want to trade the stock, if you want to trade the option, you have that luxury to be able to set this up in advance. You don't have to now be in front of a computer all day. How many times have you kicked yourself because you just weren't in front of your computer? You had the plan, you knew what you wanted to do, you had your exact setup, you were so excited, but then life got in the way and you couldn't take the trade. Next thing you know, a couple days later goes by and you missed out on 10, 20%, right? Well, not with this method, you won't miss it because you're setting up things in advance of to catch breakouts, not be too fast, not be too slow. We're sitting there and the market comes to us. So when it comes down to the type of expectation, is that you're now focused on the two most critical points of market movement: price action. It takes transactions to move the market, right? If there's buyers and sellers, right, you get activity. If there's no buying and selling, right, that's a low volume, you get very little movement. It's the essence of the market. Now you've got a way to identify, not only visually, right? I can pull up any stock at any point in time and give a simple analysis, and give you an idea of what's going to happen next. Okay, if we take a look at United Airlines, okay, we talked about this earlier today. Talked about this in a class, talked about this in a trading signal, right? This is it peaked out. The expectation is this is going to come down. Okay, it's going to come down to the 50-day moving average. If I go to the S&P 500, for example, which we spent a lot of time breaking down in my live classes, is given expectations. This is not a shock. We talked about this Monday night about the expectation that the SPY is going to go red. You're going to have red days. So my clients walk away with expectations, so they're not shocked. There's none of the shock and awe campaign, right? That's the worst state to be in, is in a state of shock, right? Frustration. Most of frustration, most of shock that we deal with is simply because we either have no expectations, we don't have enough of the knowledge. That's where fear comes in, right? Fear for me mostly comes in things that are unknown. There's no absolutes, right? I think we all could agree we're all adults. There's no absolutes in trading, no absolutes in life, love, family, sports, right? There's no absolutes. However, there are time-tested probabilities that occur over and over and over again. And I can blow your mind for hours and hours and hours on end. I guarantee it. I just don't have hours and hours and hours on end today, but I do for the next 12 months, okay? And I do spend tons of hours with my traders breaking down patterns, setting expectations, all using the same base that you see here. So from trading actual trades, I help cherry pick for you so you have a head start, right? You're not just trying to figure this out on your own. I also teach this live every single week, 4 hours, 5 hours a week, all with one goal in mind, which is to give you a sense of confidence, lower anxiety levels, and get you in a state of expectation. Actually, you'll be amazed in a few weeks how you'll start to be able to forecast what's going to happen next. And that's the magic question we do as traders, is we're always trying to predict the future. That's what we're trying to do. Well, no one can predict the future with 100% certainty. But if certain things occur, we have an idea of what to expect tomorrow. Think about our personal lives, right? If I don't get enough sleep, right? Let's say I only get an hour, 2, 3 hours of sleep. If I didn't drink enough water, I'm probably gonna have a tough day tomorrow. I'm gonna have a tough time waking up, right? I'm gonna be groggy. Well, I have a sense of, I predicted that. Why? Because certain things happened that I knew based on history, how I'm gonna wake up and what side of the bed I'm gonna wake up on tomorrow based on what I did today. If I was out in the yard working in my garden, I've got a large garden. Garden makes it seem small, but it's more like a farm. But ultimately, right, if I spend a lot of time in that garden, I'm gonna be a little sore the next day. Right? That's the same type of concept here, but you're going to start seeing it on a chart. And that to me is what's most powerful. I love sending signals. And the reason I send signals to my traders is simply so you can see the application in its real form. But that's, to me, a smaller piece of the puzzle, though most people like to think it's the big piece, but everyone's different. So once again, to go through this process does not take months. Many of you now, based on what I've walked through, and there's always more to learn, but based on the concept today of what we just did with Beyond Meat, what and why it's at this particular opportunity where I want to buy it on a pattern base with volume, my estimation in the room, I'd probably say 80% of you understand, okay, that makes sense why this is why Matthew wants to buy it. This Beyond Meat and all the other stocks on the list, I could see visually and logically why that is a buy right now. Okay. And that's only about an hour and a half of teaching this. Okay. So the goal is to be simple and repeatable. Now results, okay, it's always somebody wants results. I get it. The expectation of results, like I've stated, since I've been running signals with this momentum style trading, going all the way back, this is now, geez, over 2 years, about 300, almost 400 trades by now. This is the performance, okay? This is net profit percentage. So simple way to think about that number is it's individualized. Okay, the reason I like this number versus trying to, like other companies may do, they'll say, oh, this trade made $2,500. Yeah, but it cost me $2,000 to get into it. I only made $500. That's 25%. But I don't know. To each their own. What this number does is allows you to plug in your number. So if you were with me since the beginning, following this style of trading, right, and you traded $3,000 per trade, that's your average investment. Well, you take your $3,000 average investment, you multiply that by the 3,500%, your profit, not your trades, not your total trade with your investment plus return, but your return on top of that 3,000 per trade is $102,000. If you did $1,000, okay, that's $35,000. Make sense? But that's over since August 2020, right? But I show you this because it's about showing red days, green days. Recovery August 2020, right? We were in recovery mode. But we've also been able to generate profits even in the red market we've had this year. And there's some tricks that we do to do that, which we go over in class every single week. Okay, so ultimately, I like this to be more focused on the entire process and empowerment, because ultimately, in my experience, if you just want fish, at some point, you just give up on the fishing. It's just not as fruitful for you. It's not, you don't understand what's happening. And ultimately, that's where a lot of anxiety comes in. So if you do like what you see, if you see value in this process, if you want to learn this process, learn more about the process and get my cherry pick signals sent to you, then stay with me. I'm going to show you exactly how you can join my group. Okay. We have hundreds of traders. You're definitely not the first. But I wanted to go through this because I really want to set an expectation. All I really ask is if you're going to join, show up to my sessions, at least one a week. If you can set aside an hour, hour and a half to join me, live, do it please. If you can't do it live, I get it. Just watch the recording so you can really understand the method. So that way you're just not blindly following, a signal. You understand, okay, this is why, this is what to expect. And it's just more empowering that way. I can promise you that. So this program, this whole process is one that has been born of a focus of simplicity. Okay, so I'm going to go through exactly what is the program, and it's very simple, and that's on purpose. But this method we talk about is a buy, sell, and hold rapid profits method. Now, the questions that I get all the time about the program is geared around some simple questions. What do you need to follow along with the program? Well, you need to have a trading account, number one. You don't have to trade live right away. Okay, I would recommend, especially the new order types, if the pending orders, the conditional orders are new to you, then contact your broker. Every broker has a demo account, a practice account. Get a practice account and practice setting the trades up. There's plenty of trading opportunities. You're not going to miss out. Just make sure that you get familiar and you get confident in pushing the button. I have videos about how to set them up, so don't worry about learning how to. I want you to be confident in placing it yourself. And then you need to have I recommend you have a cell phone number that you sign up for the SMS. So make sure you sign up for the text message alerts of the signals, because you'll have emailed signals, you'll have text message signals directly to you. Full details all up front. I'll show you what they look like. Options experience. To me, a wise man once told me that the less you know about options, the more you know about options. So regardless of what side of the scale you're on with options experience, I highly suggest that you take advantage of a bonus that I'm giving away today. It's called the Options Mastery Academy, and it's literally every type of option strategy on the planet, and it takes you through a great walkthrough of the basic components and advanced components of options trading in general. Okay, so don't worry if you don't know enough now. We have an entire program laid out for you. It's a special bonus I'm going to give out. It is the giving season, so we've got lots of bonuses for you. Now, here's a cadence. Okay, so this program, we're sending out signals 3 times a week: Sundays, Tuesdays, Thursdays, all at night. So between 7 o'clock Eastern, 9 o'clock Eastern, the signals are sent out to you. So you have 12 to 14 hours. If you're going to piggyback my signals and place them, you've got 12 to 14 hours, depending upon when you receive them, to put the trade in your account. Okay, I found that that's plenty of time. It'll take you about 15 minutes, I'd probably say, maybe 10 minutes your first couple times, but then next you know, you're spending 3 minutes and you're done. Okay, that is the cadence. All right, then we have, how does it perform in bearish? Well, as I showed you, bearish or bullish, we're looking at patterns, we're looking at volume, momentum. I don't short stocks generally, but if it's bearish, we find breakouts to the south, then I'll send out buy puts, but you can also short in the ticket, because remember, remember what that trade ticket looked like. I'm going to show you here in a second, but in more detail. But remember, you had the entry price of the stock to buy, right? You also had the profit target. So you could trade the stock or you can buy the option, right? Or you can do both. Okay, so you have the full details all laid out. Now, for me, the biggest question here, or the biggest, I guess feedback I get around the program is, number one, the signals are transparent. Everything is given up front. If you've ever subscribed to a signal service, many people have. One of the biggest complaints I come across is the difficulty in matching the results of who you follow. And a lot of that isn't on purpose. A lot of it is simply because how they manage the trade. There's a level of distance of time, right? So if somebody's managing a trade and they tell you to buy something and they don't tell you when to sell it up front, well, you have to be communicated it's time to sell it, right? So forms of communication that I see is like a trading room, right? You have to just follow a chat room all day and look out for the sell. or they'll email you when to sell it or text message you when to sell it. Well, that's a time decay, right? Could be an hour, could be 2 hours. If you're busy, it could be 7 hours, could be the next day, right? So you have an entire day difference of when you're going to get out of a trade. So that's why, for me, what I love is the transparency. It's all up front. You know, you don't have to wait on, once the ticket goes out, everything's there. You know, we can't even take it back. We can't adjust it. It's already went out to the World Wide Web. It's out into the universe. And to me, that makes it easier to follow and easier to match. The other thing too about this is like the overall total submersion of the offer today, where you have not just signals, but you also have my live trading room. The Market Pro Live Club is what it's called. Twice a week live. So you're constantly immersed into this process. So you get the live essence, and then you also get the actual trading side of it in one. That combination is, to me, is powerful. But this is what it looks like. Okay, so on the left is obviously a text message, but full details. So this is forward. This is from last year. This is forward, buy the long call. There's the expiration to select. There's the strike price. There's the trigger. Okay, that's the stock trigger. There's your stop loss. There's your profit. Then you have a link. Okay, so you can go pull up the tracker. But full details, right? You know exactly how to set the trade up. Emails on the right. All the details right in front of you. You got your entry, you got your exact strategy, exact exit, everything laid out in front of you. So for me, we make it as simple as possible, fully transparent signals, and then we also teach this method over and over and over again. So you can just take it easy and get the fish, which I do not recommend. In fact, I prefer you not to sign up and join our club if you're just going to sit back and take the signals. I mean, at a minimum, take the signals, but at least show up and watch the recording so you have an idea of what we're talking about, you know, why we did what we did. I think it just makes it an overall greater experience. And then, of course, the best thing is just to do both, you know, follow along and then learn a few things, right? That to me is the best. Now, everyone's got some type of guarantee. We have it too, okay? But this is here more for me, and it's almost works on both our ends. Number one, you get a chance to see exactly what the experience is with zero risk. There's no steps here. We have no crazy qualifications that, you know, AKA hoops to jump through. You know, I've run companies where you've got a 10-step checklist to qualify to get your money back. You got to go through so many hours of this or that. You've got to watch this lesson, that lesson. You got to download this or talk to this person that you can never get a hold of, right? You know, it's just not a pleasant place to be. So once again, took a lot of lessons from my prior life. I said, look, why don't we just do this in a simple way? Let's give people an opportunity to try this program out to see if they like what they're receiving, make sure they see the value. And all we ask is that you tell us within the first month, right? And the reason why is because you're going to see in a moment all the time that we spend with each other, that at a minimum, you know, I want to make sure that you have enough time, 30 days, that's 8 live sessions. That's probably going to be about 10 to 20 trades, depending upon the month, for you to get an idea of how this method works. So to me, that's plenty of opportunity. And if you're not happy for any reason, let us know, send an email to our support. I'll give you the support email in a second, and we'll give you 100% of your money back. We're not going to chase you. We don't have a sales team that's on the phone all day long. We have a very small marketing budget, and that's on purpose. So we have a very small overhead, and that's intentional because you're going to see a price that you're going to be blown away by. And it's all because of the structure and some of the learnings that I've taken from my previous role as a chief revenue officer and my awesome team around this company and this program. Okay, so we're able to really provide this with an extreme low price. So once again, return on investment, right? So ultimately what this program is going to do is provide you with email alerts. You're going to have the SMS alerts. You're going to have the cloud tracker. Okay, so everything's going to be easily tracked, fully transparent, all delivered to you Sundays, Tuesdays, Thursdays. To sign up, I recommend you don't go there yet, but I want you to remember this website, this URL. It's Rapid Profits, plural, right? We want more than one profit. rapidprofitsmethod.com. That's how you're going to sign up. Now, before you do that, like I said, I've got some special bonuses, gifts. It is once again the giving season. So we've got 4 additional bonuses that you're going to get today. I'm going to talk about these in more detail. You're going to get live training sessions with me, the Market Pro Live Club membership for the next 12 months. You're going to have access to my toolbox. I call it the Empowerment Toolbox. This is where I've got 10.5 hours of lessons. This is where I've got all of my checklists, all the watch lists that we use in the sessions in the class to find trades. Basically anything that we need that comes up, I post inside of this toolbox. We also have access, as I've said already, you're going to get the Options Master Academy today, and then also money management training. These 4 additional bonuses will come with your rapid profit method today. Now, this is I would say the most favorite piece of this program. My favorite is the Market Pro Live Club. Simple reason why. This is a way for me to help guide your expectation in the market. We go through an in-depth analysis. I mean, these classes are like 2.5 hours. And we start with the big indexes. So we'll start with dollar index, the VIX, and we'll go into the like oil. And then we'll jump into the SPY, the NASDAQ, the Russell 2000, the diamonds, all for one reason. So we have an expectation of the next couple days. Everything's always in a 2.5 day cycle. We meet Mondays at 7 o'clock. That gets us the game plan for Tuesday, Wednesday, half day, Thursday. Then we meet again on Thursday. So we go through the afternoon Thursday game plan, Friday game plan, Monday game plan, and we rinse and repeat over and over again. So we always have an idea of what's going to happen over the next couple of days, always with an expectation. So we're always on top of it. We also then dive into sectors. We're trying to find bullish breakout sectors. An easy example, many of you know now, when the SPY, NASDAQ, and the rest of the market went hyper bearish starting January 2022, what went bullish? Energy. We traded energy because we saw the reversal of the breakout following different sector ETFs. We talk about those in class. We also talk about trading signals that went out, individual stocks that traders are looking at. We evaluate a game plan on different strategies based on the current conditions. But this to me is really the full immersion. This is why I love this, because you're going to have this access for the whole year on me. We sell this individually. I'm going to include this at no additional charge. I'm also going to include my toolbox. These are 2 of my favorite pieces of the toolbox. There's much more on the site. This is the agenda course that's available there. This is all included, all in the toolbox. This shows you how to identify trend, how to use the momentum, how to set up your charts, how to set up and find entries, pick your profit targets, pick your stop losses. It's about 10.5, almost 11 hours of content in here. These are my checklists. These are 4. There's, I think, 6 or 7 on the page. These are the main 4 that we use. Okay, you're going to have all of those. And there's also videos of how to set a trade up and all the other relevant videos around different pieces of our strategy, all in the toolbox. That's a special bonus as well you're going to get today. You're also going to get, again, the Mastery Academy. Okay, so how to read option chains from a beginning standpoint strategy to multi-leg options, which are extremely advanced, and all the other relevant support around just the options trading world. We're going to include this as well. Now, to me, money management is one of the most underutilized, undervalued pieces of the trading toolbox for traders, and simply because it's, can be somewhat boring. But to me, it's the most important piece, because much of your success, your longevity in the market is going to be based upon how well you manage your money. And that's just not a holistic thought of manage money. I'm talking about how do you use different stop losses? How do you actually let profits run and cut losses? How do you know when to scale? How do you know when to increase? If you're not using a set, standardized, average investment size per trade, you're set up for a hero or zero mindset. Okay, these are things that I talk through and I teach through of money management, not just dollars and cents, but what's the strategy? What are different techniques we can do to weather storms, right? Much of your success is going to be how long you make it in the game. How well can you sustain drawdown? How well can you sustain a losing streak? How do you maximize a winning streak? Yeah, those are all techniques that are extremely valuable, and we got to talk about the process, right? So we're going to break that down for you. So ultimately, at this point, this is the opportunity that we have for you. We're going to be breaking down and providing everything I walked you through today. As promised, because of the fact we have extremely strong relationships, we've been intentional about where we invest on the company standpoint to minimize overhead in certain areas. We're able to provide amazing pricing for you. Everything you see here, plus the 4 bonuses, is $399 for the whole year. One-time fee for the whole year. There's no additional charges unless you want something else. But for this program, it's $399 for the year. However, the first 10 of you, I've got a special bonus. The first 10 that go to rapidprofitsmethod.com and sign up using the coupon code MAT150 will receive an additional $150 off the $399 price. So we're talking now $249 for the whole year. And the reason we can do this, once again, is the intentionality of how we build support. We have removed the large overhead cost of a large sales team. You all know what I'm talking about. And from a marketing standpoint, we leverage phenomenal relationship like we have right now with Investorexpo, and we have others as well, right? But this is one of our favorite people to work with here. This is how we're able to offer such phenomenal pricing. And the main reason I started off the event this way is I know and I've created programs and products for a decade in this industry, from $10 products to $10, $15, $20,000 products. What I offer here today, what you're seeing here, you've seen similar offers, but they're $2,000, $3,000, $4,000. Okay, they have a different business model. They have a different way to build their overhead. We have done it different, so we're able to pass this on. And the other main reason we're able to do this is because our referrals from our successful traders that stick with it, they're also a huge component of allowing us to offer pricing this low. But I will say, January 2023, this $399 will be going up. Okay. The more, there is a threshold, right? When we're talking about hundreds of clients, sometimes it costs a little bit more to send a text message. It costs a little bit more to send an email, right? Make sure we have our website top notch, right? So that price will be going up January 1st, 2023. So now you've got a phenomenal opportunity. Lock in $399. If you are the first 10 to go right now, go to the page. If you type in rapid profits, plural, method.com, it's going to redirect you. Okay, so don't worry if your site changes. That's intentional. We want to give you a simple URL to type and remember. That'll redirect you to our secure checkout page. When you get to the checkout page, this is what it's going to look like. I'll pull it up so you can see it. I don't want you to miss the coupon. Now, if you missed a coupon, let us know in the question section. We'll be able to go back in and help you out. We will honor the 150. If you didn't hit the right button or if you missed hitting the coupon, just let us know in the question section. This is what happens when you type. So I'm gonna pull it up here so you can see. Rapidprofitsmethod.com. It's plural profits. Remember, we want more than one profit. And then it's gonna redirect you. That's that redirect. Okay. So once we come down here, you're gonna see this is available until 12/10. Okay, so you have a couple days here to lock this in. Once again, you have 30 days. So what's a couple days amongst friends? Lock in the 150 now. You have plenty of time. You've got the 30-day guarantee. So once you come down here, you're going to see click here to enroll. You can read more. There's a ton down here. You'll read a little bit more about my backstory on creating this program. But ultimately, you click on add to cart. And then from here, you're going to take to the checkout page. Basic checkout page you've seen before. Here's the coupon code. So it's right here. It's MAT150. MATT150. You can see down here, it says $399. You apply the coupon code. Don't forget to apply it. There's your $249 for the entire year. Every time I see that, it just makes me crazy. So how much is that a year? A month? That's a lot of value, I would think. I mean, my goal is always to have a 10x, 20x type of value perception. as you can tell, I like to teach. I mean, that's a phenomenal investment. It's $20.75 a month. What is that? A couple Starbucks? One Starbucks? I don't know, depending on what kind of drink you have. Now in here, there's other content that you can add on. Okay, so you have the options profit generator. That's another option signal service. It's similar. The difference here though is this is low cost. So these are lower premium pricing down here. And this is daily. So the rapid profit method is Sundays, Tuesdays, Thursdays. Options profit generator, we look at the market every day. Doesn't mean we send a signal every day, but we're looking at the market every day. So you could have 2 signals in a day with this addition. Normally you pay up front for the year, but you can add it on for just $39 a month. This is daily signals. And then you have this Traders Club special reports pack. This is for those that like to really immerse themselves. I like to read like physical content, you know, I like to print out things and read them and take notes. What the team here has done is they've compiled some amazing reports. I think reports is an understatement. These are like volumes of data. But these are some of the secrets of some of the and insights of some of the top traders in the world: Warren Buffett, Sir John Templeton. This is called Titan Value Investors 4B's checklist. I think it's from Bill Ackman. That is a phenomenal checklist for investors, right? This is buying, you know, buying companies, right? Investing long term. You know, that is the insight here, I'll say, is phenomenal. But this is, you know, it's not for everybody. You want to read stuff. That's what this is. You want to really immerse yourself and get behind the scenes. Look at formulas, you know, how some of these hedge fund traders evaluate a company. It's pretty phenomenal stuff. But for $49, you're getting an amazing value. Each one of these we sell for $200 plus. $200 plus. But you're getting a phenomenal, for adding it on now, you can always buy them later. It won't be the same price, but you know, those are just simple add-ons. If you want more, you can get more, okay? But ultimately I just never thought about it until I just said it, but for $20 a month, you're gonna get 8 live trading sessions, 4 hours a week. Jeez, you're getting like, paying me $1 an hour. It's pretty good. Good thing we have hundreds of you doing it, right? But ultimately, very simple offer, right? You're getting signals. You get access to a membership area, which has all the information, all the tracking, all the different watch lists. I mean, there's just so much to talk about in a session like this, but to me, the most important thing to walk away with is, look, it's $249 for the year, you know, broken down to $20 a month. Is it worth an opportunity to put yourself in those trades that I share with you? You know, following the signals alone, it doesn't take much to cover your whole year, does it? $249 covers your whole year. That's intentional. Remember, I said it. I want to lower and give you all the tools, free resources that you can use to remove hundreds and hundreds of dollars a month from your overhead of your trading business. I don't think we need to be spending $20,000 a year on technology, education all the time, because what's education? You're learning a new way again, right? It's almost like every time you learn something new, you're resetting the clock. So if you're learning 5, 6, 7, 10, 20, 30 strategies, every time you're extending your learning cycle again and again, versus having a strategy and being able to apply it no matter if you're trading stocks, if you want to trade options, you want to trade futures, Forex, ETF, cryptos, bonds. Same analysis that I gave you today, and this is just a small snippet. I mean, this is probably 10% of how we use the strategy on a day-to-day basis. It's one baseline approach, and from there we leverage it in different ways. But we all look at the trend the same way. We all look at volume the same way. How we use that, there's multiple ways we use that, but it's all on the same base analysis approach. I don't throw in another magic widget and say, oh, look at this new magic widget, it's going to solve your troubles. Oh wait, no, that didn't solve it. Okay, here's another widget. No, this is the way, the process we work. And then from there, I expand how we use it in different methods. Okay, so that to me is a huge piece to a lot of what traders of mine love, is that the base is the same, and then we build off the base. We're not going to learn a new way, a new base approach. It's all one singular process. All right, perfect. So yeah, let me know if you're signing up. I'd love to keep my eye on you. Let me know in the question section if you're in the process now. I do want to make sure the team can follow through and make sure they see your order. I want to make sure they ring the bell. Like trading ETFs. So Jerry, on ETFs, there's volume. Yeah, we have a list of high volume ETFs. Yeah, if you like trading ETFs, we spend a lot of time in ETFs. I would think we're probably like 70-30. 70% of our time is on different stocks, and then the other 30%, and it could be more. It might be 60-40. And not because we're trading individual ETFs all the time, but we use ETFs to trade. We use ETFs to analyze sectors. But yeah, if you love ETFs, you'll love what we go through. Yeah, Rocky, not every day is a signal. So when you go to the tracker, you'll see no signal, and I'll have the date. Well, we look every day. Doesn't mean every day is a trade. So if the market's low volume, like we talked about Monday night, right? If we fall into a low volume retracement, we're not going to trade for the sake of trading. But we post it there. You'll see it'll say no trade. So at any time you're curious, just always go to the tracker after 9 o'clock. And if there's no trade, it'll say no trade. And I'll have the day. But that's one thing is, I'm not operating with a quota of number of trades. I don't think that way about the process. My goal is to provide repeatable, profitable trades, not number of trades. But we look every day. But sometimes there's no reason to push a trade just for the sake of trading. Good question, though. I got a question. Andre says, never traded options before. How long is the learning curve? 2K, I mean, so what we'll do, Andre, if 2,000, what happens is you limit the number of, if an option premium is too high, right? You don't want to trade with 2,000. So some of these premiums could be $500, right? So the answer is yes, you could trade it, but I would definitely, before you start trading it, I would say sign up, come to the class, see the process, and then from there, we walk through different ways to leverage smaller account sizes. So you'll see, based upon the signal, which ones best fit your equity size. So there are plenty of trades that fit your equity that I send out, but I want to make sure I can walk you through which, so you can see the money management side of it. And when you sign up, one of the first things you'll see in the empowerment toolbox is a money management spreadsheet. It's a guide that will walk you through, how to set your minimum investment. So it doesn't really matter what you have. If it's 2,000, 3,000, 4,000, 100,000, you're going to want to set a minimum trade investment per trade. So if it's $200 a trade, if it's $300 per trade, right? You go into it with a cap, so you don't become an all or nothing trader, right? You don't put too much into one trade. You want to use a percentage and then stick with it until you hit a growth milestone, and then from there you scale, right? But there's a whole process laid out for that in a spreadsheet forecasting type model, where you can start small, and then as you get into the trades, you can start to build up your account, and the next you're $2,000, $3,000, $4,000 in your account, and now you're able to scale with it. Yep, you got it, Andre. No, that's a great question, though. See, I got another question. What can I expect on day 1? What should I expect in month 3? Yeah, so on day 1, the first thing to expect is to get into the membership area, and you're going to want to get familiar with placing trades. Okay, that's number one. So understand placing trades, and then I want you to go and watch the latest, which would be Monday night at this point, the latest Market Pro Live recording. Okay. So by watching how to set up the trade and watching your first class, for you, you're lucky. We have a live one tomorrow at 12. Okay. So 12 p.m. tomorrow, we have our next live Market Pro Live Club. If you can't make tomorrow at noon, then the recording will be posted around 3 o'clock. So then go watch tomorrow's recording. By doing that, you're going to have a full round circle understanding of how does Matt look at the market? What tools do we use? How is it in the current market now? And then at that point, you'll be able to start to build the sequence of forecasting. Because what we do is we forecast. I tell you literally, okay, based on this, this, and this, and this, and I teach it, this is where the probability is tomorrow and the next day. So like the red day we had over the last couple of days, the red direction, we talked about it Monday night, specifically expect the red days here. This is why you expect the red days. So all of my traders, Tuesday, Wednesday, they're not shocked. They entirely knew what to do, right? That's day one, and that'll get you probably through like the first 2 weeks, 3 weeks of seeing that play out. That's why I say, if you're gonna sign up, give me at least a session a week with me, be it night on Mondays or be it during the day on Thursdays. So you can actually see how it plays out, because ultimately that's what the measurement is, right? The goal of what we're trying to do is set the expectation of what's going to happen next. Well, the only way to know what's next is to find out what was the forecast. What did Matt say the market's going to do? Why did he say the market's going to do that? Especially when you see the SPY, the NASDAQ, we call that thing tight. So then when we come to tomorrow, I'm going to pull up and we're going to review the analysis we talked about Monday, and we're going to say, look, this is what happened. Everybody see, this is why I said this is the expectation. Okay, this is how it played out. And then 2 or 3, 4 of those sessions like that, you're going to be, wow, okay, it's really making sense. It's really clicking. The transformation about 6 weeks to 8 weeks in is that my traders who show up and they really buy into this and dig into the process, they're applying this strategy to all of their trading portfolio. So they're taking the strategy, using it for multi-leg option trading, for their own calls, their own puts. My trades are something just cherry for them. They're driving, they're owning it. I mean, at this point, they show up to every class and we have dialogues. They're telling me what they're looking at, telling me about the profits they're making, on how they apply the strategy. So literally by 6 to 8 weeks, the traders that show up at least once a week, you know, the transformation they have, the dialogue we have, the conversation, they drive their entire portfolio. I'm talking about retirement accounts, to option trading, advanced multi-leg options, to ETF investments, to trading futures as well. I've got traders that use futures with the strategy. Right? I mean, so it's not months, you know, we're talking, 6 to 8 weeks immersion, and this is their new mindset. Their new method is this method I showed today. It's totally taken over and becomes their way. That's the transformation. It depends, with the signals. If I don't send a signal out, it's because we're either in a transition, meaning we're in consolidation, or there's no volume. I mean, that's basically it. Remember, what's the crux of the breakout, right? Well, we need trading volume. So if volume's down across the market, that means the market is choppy, right? There's not a lot of room. I don't want to buy a breakout into a chop. I don't get chopped up. So that's when we won't send a trade. Another time we want, if there's like a major announcement coming up, okay, like we have PPI on Friday. If it's coming out a little wacky, if there's like some crazy volatility leading up to it, may pass on that. All right, but that's about it. But remember, there's 20 trading days in a month. I would say in a month, even in some of the worst chop that we had in the summer, at least there's 2 trades a week. But then sometimes there's 7 trades a week. Yeah, if no one's told you before, I'll be the first to tell you. Just because you have the ability to trade something, to buy something, to sell something, doesn't mean you should do it, right? I mean, it's just, remember, it's all probabilities. Yeah, just because you can doesn't mean we should. Yeah. Let's see, you got some questions. Oh man, I got more questions. Great questions coming in. Yeah, so there's different styles, but people are asking, does this work well in a volatile market? To me, there's a trade for anybody almost, right? But there's some give and takes about trading opportunities. So I have aggressive traders. So I specifically will say in a class, okay, this is an aggressive strategy. And I'll walk them through an aggressive strategy that's ideal for a volatile market. A volatile market, my definition, is when you have short runs, highs and lows, right? You get a quick burst and then it goes the other way, right? That's to me is a choppy market. It's a volatile chop. It's not a clear direction, but you're getting 2-3% moves on a day, especially like the SPY. That's chop. But there's aggressive strategies I teach based on this architecture of the moving averages and the volume to trade those aggressive ways. So yeah, there is, but there's a give and take in every market. If you are aggressive, you're willing to put a little bit more money into more aggressive opportunities, and sure, there's a way to trade volatility. If you're conservative, you don't want to deal with the added stress of a counter trend, right? That would be an aggressive trade. Trend's up, but then it's pulling back. Okay, that's an aggressive trade. Then I tell you, then don't place this trade. I send out signals on a conservative base. So I don't send out signals that are going to be, counter trend aggressive trades, right? But in class, I'll teach different methods, but not from a signal perspective. Those will be hold times. We'll just literally wait. Cash is a position, folks. I love to trade just like the best. I mean, just like anybody, I love to trade. I love the fun of it. I love the excitement of trading. Once again, sometimes it's just not the best time to trade. And if you don't like, if that doesn't make sense to you, if you don't like that, you want to trade every day, then, obviously, we may not jive, which is fine too. I've been doing this long enough, work with thousands and thousands of people. I know that I can't help everybody, and, that's fair, and I appreciate that. But these are some of the things that, I try to remove and try to teach to a level of patience, though I'm not a patient person naturally. I mean, I'm not patient naturally. So trading requires a level of patience. So I built in certain mechanisms that push me or force me to be patient. And I'll teach you that. But things like catching a breakout, I just don't get emotional and hit a buy button during the market hours. I rarely trade a live trade in a market order in the live market. Rarely. I don't even know the last time I've done a live trade, because I am an opportunistic person. I'm optimistic by nature. I will tell myself a story to buy something. If I stare at something long enough, it'll look good. That's how optimistic I am. So for me, setting up the trade in the manner I shared today, where it's arm's length, I don't have the emotion of the P&L going up and down. That is built in. That's intentional. Having and buying off highs and lows, that's intentional. To get a high, you need two bars to the left, 2 bars to the right, lower. That's 5 days to fulfill that. Okay, that's a level of patience. And there's many more you'll pick up with me, but that's on purpose. Okay. Great question though. Let's see what else we got. All right. Wow. Looks like that's all right, Phil. We'll get you squared away. Yeah. You just forgot the coupon code. Yeah, no worries. Yeah. Looks like Kim's got you taken care of. Kim's got you. All right, perfect. So at this point, just looking quickly. Yeah, it looks like we're good to go. All right. So at this point, I'll leave this open, but I will be saying farewell. It's past my dinner time. It's been a pleasure. I'm excited for my new clients coming on board here today. You're going to be registered. Okay, so you'll get the invoice, you'll get your welcome email. You'll also get a registration confirmation from GoToWebinar for our Market Pro Life Club, which is with me. So that's tomorrow at noon Eastern. And that's about a couple hours. Okay, so about an hour and 45 minutes, 2 hours. If you have to leave at any point, don't worry, they're always archived. and we've got hundreds of sessions archived. So, and then from there it's Monday. So it's one link for Thursdays and Mondays, rinse and repeat, same sessions, same links. You don't have to worry about re-registering every time. It's all set up for you. So that takes about 15-20 minutes after you sign up. So don't look for it this second. It'll be in the next 15-20 minutes. And I'll see you tomorrow at noon. You know, for those that need a couple more days, remember December 10th is the cutoff day. So you do have a couple days. We will get the recording out to you. Investorexpo does a wonderful job getting the recording out. Put it on the calendar. All right. So with that, it's been a pleasure as always. For those that have seen me before in this event, hopefully I added some new tools to your toolbox. And for those I met for the first time, it was definitely a pleasure. And I look forward to seeing you in our next event. Hopefully it's in a class so we can actually really dig in and actually talk about application of the process on a day-to-day basis. For $249 a year, that's less than 20, that's $20 a month. Ask yourself, what if it works? And you go back and, man, $20. And then don't look at your past statements of what you spent on other stuff before. I've already had that conversation with many people. They're like, man, I cannot believe I spent $10,000 in the last 2 years on this system, that process, that education. And for $250, you literally have changed my whole trading. That's not that's a very common discussion I have with my traders. So don't let the low price hold you back. I mean, this is literally exactly what you saw today. In fact, this is literally on purpose and intentional to allow all walks of life, no matter what you're, you know, what's impacting you. If you honestly cannot sign up for $249, how are you going to trade in the markets, right? I mean, we're talking about a contract size, right? That's most traders are trading $1,000, $2,000, $3,000 per trade. I know there's some less, right? But on average, right, this is less than, you know, 10% of your average trade for one trade. Talk about 12 months of support, dozens of trades throughout a month, right? All the time. I promise you, show up, you'll love this. And if you don't, that's fine. Let us know. You get 100% of your money back. Very simple. We don't mess around with all those hoops to jump through and all that silly stuff that's around the market. Been doing that too long. So with that, I will say my farewells. For those that signed up, I'll see you tomorrow, Thursday at high noon. Have a wonderful rest of the evening, and I'll be back with you tomorrow. For those, for the rest of you all, it's been a pleasure as always. Thank you all.